Hi guys, it is an absolutely spectacularly gorgeous winter day in South Austin, Texas. We have made it to Monday morning, January 20th, 2013, and so Monday morning is when I do my usual economic meltdown roundup, where I click on the pages of the mainstream media right here at Yahoo News to bring you news of the ongoing collapse of the U.S. and global economies. Now, of course, today, guys, I spaced out that today was MLK Day and the stock market is closed, and so there's not much on the business page. I guess, you know, what we got going on is that inauguration of our friend Barack Obama going on there hand in hand with MLK Day. And well, I guess one thing you can say about Martin Luther King is he did keep Mitt Romney out of the White House. We can thank MLK for not having Mitt in the White House. So instead of having a white lying sack of shit war criminal in the White House, we are going to have 4 more years of a black lying sack of shit war criminal in the White House. And of course, his big party being paid for by the global corporatocracy. You know, Obama just sending out an invitation to any multinational corporation who wants to throw some money into this party. I think so. I guess we have what, Exxon Oil paying for Lady Gaga to inaugurate the next 4 years of lies and war crimes and attacks against this planet. But it really makes zero difference whether Barack Obama or Mitt Romney's in the White House as far as the U.S. and global economies are concerned. So I guess I will move into this fairly quiet day on the business economy pages. But I did find a few a regular salad bowl of seemingly unrelated stories. I'll just let you draw the dots between all these various stories. Speaking of salad bowls, right here, the first one, CNBC Veggie Freeze, why your salad will cost you more. Okay, so this is hard to give this one on such a beautiful day where it's going to be 75 degrees, but right up here in my own garden, all of my own winter crop of vegetables froze this year. This is the worst garden I have ever had in my entire life, so I can understand what they're talking about here. Okay, it turns out the deep freeze, which, this is from CNBC, it turns out the deep freeze which hit the West may not have done much damage to California's $2 billion citrus crop. Instead, the damage may have already been done to the nation's salad bowl. So prices are rising for basically for green leafy vegetables. So the price is more than doubled on spinach. We're not selling asparagus. Asparagus, I guess, is going like $6 a pound. Nearly all of the fresh lettuce, broccoli, cauliflower, artichokes, and other winter vegetables grown in the U.S. come from Southern California and Arizona. And the USDA said prices have jumped considerably. Romaine lettuce has tripled. Broccoli has tripled. Spinach up 150%. Anyway, so there you go. Just plan to spend a little bit more money on your salad due to the cold weather before the hot weather kicks back in and everything else you eat goes up. Okay, let's jump from that one particular interest story, short-term story, to I guess this was my favorite story. I guess favorite story. And I'm going to put a link to all these. This is the main one that I want to draw your attention to from the Daily Ticker. 3 disturbing economic trends for 2013, 3 disturbing trends, and then they promptly list 5 in the story. So somewhere it's 3, 4, or 5 disturbing trends for 2013 that I am going to share with you today from The Rock. When it comes to major economic news of 2013, some of the most profound stories are at risk of going unnoticed, meaning by the mainstream media, says Paul Brandis, founder of West Wing Reports and columnist at The Week. In a recent article, Brandis highlights 5 trends we should focus on more, but sadly won't in 2013. So here they are, guys. Number 1, according to Mr. Brandis, number 1, we are heading to the poorhouse. According to reports, 75% of Americans have only $30,000 saved for retirement, a reminder of the country's bleak personal savings level. Social Security may be up for reform. Pensions are completely going to hell. And while all this is going on against the backdrop of policies in place, encourage spending and growth at the expense of savings. There you go. Number 2. And as I say, I got links to all of these. I strongly encourage you to read this article. If you click on any one, it's a short, sweet, to the point, but there's a lot in here. Number 2, the erosion of public trust. Compounding the aforementioned problems, Brandis argues, is a broad erosion of public trust in those making the crucial decisions. He notes that only 7% of Americans trust members of Congress. Quote, it's hard to get anything done when people don't trust the people in positions of authority. There you go. I'm certainly one of those. Number 3, and I'm amazed to see this showing up in a story on the economy. Number 3 is the water crisis. This summer's drought, meaning 2012 summer drought, the worst in the U.S. in the last 50 years, is just the beginning of the nation's water crisis. Brandis also points to the severe water loss due to faulty infrastructure. Upgrading the aging infrastructure alone will cost the government an estimated $1 trillion. And it's hard to imagine where $1 trillion will be found in an era of staggering trillion-dollar U.S. budget deficits. I've had enough stories last week about the budget deficit, and I'll have one following this story. Number 4 is the failure to connect the dots among complex economic issues. This is, Brandis calls this another disturbing trend. For example, just one he mentions is millions of private sector job openings have been left unfilled due to mismatches between skills and positions. Yeah, meaning the position is, knowing when the fries are done at McDonald's, and it doesn't take someone with a graduate level degree in economics from MIT to figure out when the fries at McDonald's are done, or how to ring a bell as a greeter at Walmart. I think it's what he's referring to. But all this about connecting the dots. This is what I try to do on Monday morning and every day. And guys, number 5, I am absolutely flabbergasted to find this. I have never before seen this item mentioned in all of these months of ranting about the mainstream media's reporting on the global economy. This is the first time, and of course it's number 5 on the list here, that this notion has ever been mentioned. The extinction crisis, the sixth mass extinction that I'm always harping about, which is going completely ignored by every economist on this planet. I cannot believe, hallelujah, Mr. Brandis. The extinction crisis is Brandis's fifth trend to watch. According to the Center for Biological Diversity, how many rants have I had about my heroes at the Center for Biological Diversity? Hallelujah, they're showing up here on the economics page. 30 to 50% of all species, and this is on this planet, 30 to 50% of every species on planet Earth are heading towards extinction by mid-century. It turns out the tiny honeybee, maybe one of them, headed for extinction right along with Americans' nest eggs. So there you go. Excellent article. Go see it. So he mentioned this damn debt ceiling. I'm going to try not to bore you with this debt ceiling stuff. But I like this article. This will be my one story about the debt ceiling. This is from the Daily Ticker about an economist, Doug Casey. America should declare bankruptcy. There you go. This guy gets right. This guy gets right into it. This week started with President Obama demanding lawmakers raise the $16.4 trillion debt ceiling, and we have Federal Reserve Chairman Ben Bernanke advocating just getting rid of the debt limit altogether. The Washington Post reports in a conversation that Bernanke said the debt ceiling has only, quote, symbolic value. There you go. Let's cut the crap here about this debt ceiling. It's such an absolute joke that, you almost got to agree with dictator Bernanke about the debt ceiling having only symbolic value. So this is this fellow Doug Casey, chairman of Casey Research. He is a professional investor and author of Totally Incorrect. Okay, this is what this economist has to say. Quote, Bernanke is quite correct. It is, meaning these negotiations over raising the debt ceiling, is theatrics. The problem is the amount of debt itself. The problem is so big at this point, I think it is very questionable whether this problem can be solved at all. Guys, they're going to keep on kicking this can down the, what did I say last week? That they've already kicked this debt ceiling can down the road 76 times. 76 times in my lifetime, and this will be number 77. But one that's at some point they're going to kick the can for the last time, and that is when the crash of crash will comes out. Okay, getting back to Mr. Casey here. Casey points to the money America owes above and beyond the official $16 trillion national debt, which is just one more horseshit number coming out of Washington, as the real issue. He starts looking at the so-called unfunded liabilities from entitlements such as Social Security and Medicare, which if you roll those in, he puts the actual number at $86.8 trillion, or 550%. 550% of America's gross domestic product. And you can, it all depends on where you draw the lines. And if you roll in FDIC into this, then the number goes up over $100 trillion. Quote, "This is far more than can conceivably be repaid. So the debt is going to be defaulted on. It's simply a question of how." So, you know, it's no longer, well, it's a question of it's no longer a question of if, it's a question of when and how it will take. You know, when the final can kick will happen and exactly how it will play out. Will it be one absolutely catastrophic economic depression, or will it just be more of this roller coaster ride where each time the roller coaster goes up the hill a little bit is followed by it falls down? One step forward and two steps back. Either way, we get to the finish line. It's a matter of when and how, not if. But again, I have links to all of these. So anyway, guys, enough of the U.S. I'm just gonna, I'm just going to bounce around. Let's just check in other places on. Let's go over there to Asia. I think well, this, you know, guys, this is how. Now, talking about the connecting dots. This is connecting the dots all over the planet. This short story, which again I have a link to, this is connecting dots from the U.S., Europe, Japan, China. All of this is thrown together in this one story from CNBC. If trust in currencies erodes, gold will skyrocket, and hopefully silver. So this is ostensibly an article on gold forecasting, but you know, this short, sweet article connects all sorts of dots. Okay, is gold getting ready to rip? Okay, reports that Germany intends to repatriate the gold that is being stored at the New York Federal Reserve should be supported for gold prices. And this is, and there are several articles that gold, that Germany is saying, okay guys, give us back our gold. And of course the conspiracy theorists, who we'll find out how full of shit they are, Max Kaiser and his gang, are saying we've already lost Germany's gold. It is not even sitting in New York anymore. So they're going back. That's happening over there in Germany. And the implication here is that trust in fiat currencies is being eroded by central bank involvement. And then they jump over there to Japan. Japan's recent policy change toward a weaker yen. So they're there in Japan, where their little Japanese version of Bernanke is absolutely gone out of control. With QE going on over there in Japan, in this last-ditch effort to punt, to salvage, you know, the collapsing Japanese economy by all of their stimulus on steroids going on over there. We'll see how that plays out, coupled with ours, you know, coupled with our own Federal Reserve's ongoing bond purchases, is making gold a more attractive asset. This is a guy, this is Jim Iorio, Managing Director of TJM Institutional Services. He's looking at all of this, you know, all of this Keystone Cop stuff going on in these global banksters from Germany to the U.S. to Japan, and he's saying the only reaction is his belief that if that the gold market's reaction to the news so far has been positive. So he's thinking that gold is going to go up. Frankly, I'm surprised that the move in gold has not been bigger, as this could be the beginning of a monumental shift towards, quote, safe haven wealth storage. When trust is the central issue, markets tend to have enormous moves. This is tying directly back into this trend that nobody trusts these evil bastards anymore. These banksters, or the politicians that these banksters have in their pockets. The game is up with these guys. This is why I pulled all of my money out of the damn bank 4 years ago and put it into physical silver. Physical silver, physical gold. Safe haven is the word these hotshots use for it. Okay, then let's go over there. Let's go there to China from CNBC. This is talking about these conspiracy theorists talking about the dollar losing its ridiculous position as the world currency. Guys, the oil dollar is and has been the world currency for years, but simply because the majority of OPEC traded oil is still traded in US dollars so the quote US dollar is piggybacking on the coattails of the real world currency, which is oil. But anyway, the rest of this planet, particularly China, is getting kind of fed up with this. And how do you pronounce this word? Y-U-A-N. I'm going to call it yuan. I don't know if that's even how you pronounce the Chinese dollar. Okay, from CNBC, yuan as a world currency, getting there fast. Okay, and so this is the story on the rise of China, and about these Chinese, these global banksters centered over there in China, you know, playing hocus pocus with their monetary policy, and you know, getting leveling the playing field. And so according to this analysis, let's just get into it. Okay. As Beijing eases control over its currency and opens up its financial markets to more foreign investors, to more global investors, the yuan, Y-U-A-N, is gaining ground as a global currency and is headed for further gains. And I can't sit on my rock for more than 20 minutes without a U.S. Army helicopter flying over. Okay, the yuan, also known as the renminbi, I love that word, renminbi, hit a record high against the U.S. dollar this week. And analysts say the currency is at its strongest level since China's government unified official and market exchange rates in 1993. All right, you say that the Chinese dollar, whatever you call this damn thing, is trading against the dollar at its highest rate in 20 years, and the snowball is growing. Can you say safe haven in precious metals? A dumb hippie on a rock can read the handwriting on the wall, guys. Are you with me? The significance here is not so much the trend in the yuan, but the growing use of it internationally, said China watchers. I love that term, China watchers. I certainly think I've identified myself as a China watcher. Okay, quote, "This is all about the function of the currency and not its value, which moves just a little bit." This was HSBC's global head of Forex strategy, David Bloom, talking about a global bankster. The yuan is at much more of an equilibrium value right now, and this currency is all about opening up. We're talking about death and decay in other markets, but China is going its own way. This is about the liberalization of that currency, and it's going to be fascinating to watch over the next few years. Okay, so right here, this is data from one of these economic groups, a global SWIFT, a global transaction service organization. Data show that international payments in China's yuan soared 24% in November. From October, between October and November, trading using not the dollar, the Chinese dollar, soared 24% in 1 month, guys. Beijing has been encouraging greater use of the currency globally via bilateral currency swaps and trade deals. Can you say globally this, you know, guys, even I can understand this. Chinese central bank data last week shows that cross-border trade settlements in the yuan stood at $467 billion last year, guys, a rise of 41% from 2011. 41% last year, 24% month-over-month rise between October to November. Guys, we're not talking tiny little, well, yeah, I don't know, Hambone. Alright, and here's comments from China banks that foreign investment could be allowed to rise as much as tenfold. As much as tenfold coming up. Another sign of China's willingness to open up its markets, and further implies increased use of the yuan as a world currency. It goes on and on. Forget the acronyms. Look at what has happened. What is going on is renminbi internationalization. This is some other economist. Oh boy. Anyway, this goes on and on and on. An excellent article for anyone who does not understand that that people are getting fed up with the U.S. dollar being the world currency of default, and this is why more and more dumb hippies, a lot like me, are investing in physical precious metals as a safe haven against the imminent collapse of the U.S. dollar. Okay, let's two more quick ones and then I'll wrap this up. Let's go down here to Brazil. Here's from CNBC. Brazil's once booming economy losing shine. Again, I'll put a link to this. Brazil, long viewed as one of the most promising emerging markets, has seen its crown slip in recent months. the country has been enshrined as Latin America's economic powerhouse for more than a decade, fueled by its vast resource wealth and investment from China. That it is the investment of China raping and pillaging the Amazon rainforest so they can make products to sell this cheap shit to us here in the U.S. This is how U.S. consumers are directly contributing to the destruction of the Amazon rainforest by buying this cheap shit such as this computer and this pair of glasses, this made in China shit from natural resources that come from the Brazilian Amazon jungle. Do you get it? And but this is, there's problems forming. Its dominance is under threat as other emerging markets compete furiously on cost, such as Peru, right next door. Peru, Ecuador, Colombia, Venezuela, Bolivia, the whole goddamn continent of Africa. You know, as Brazil makes it more and more expensive for China to do business over there. These other guys, these other third world economies are saying, listen guys, we're rolling out the red carpet for you to come rape and pillage and plunder our natural resources. And good God, Peru is completely falling all over itself to turn itself into one giant petrochemical complex to sell this shit to China so they can sell this cheap shit back to American consumers. And anyway, you can go on that link. And finally, I will finish up this rant with this one just had a personal appeal to me. Let's go over there to Europe. This is from BGR News Service, whoever the hell they are. Well, I just love this one. Will Europe's nosedive in consumer spending crush smartphone sales as well? Well, that sure as hell hope so. Smartphone sales in Europe. Okay. There are new signs of European consumer spending finishing the year 2012 on a very weak note. Could this mean that consumer electronic sales from video game consoles to smartphones will face an outright slump in the first quarter of 2013? The latest and worst indication of a European consumption freeze comes from the automobile industry. I reported on this last week, where car sales in the European Union dove more than 16% in December. Well, I've already talked about that, but smartphones aren't cars. But car sales are often a fairly good indicator of the overall consumer mood. It's worth noting that several UK retailers announced dismal numbers for December. So there you go. Europe still makes up more than 25% of global smartphone revenues. After the stunning car sales plunge in December, it will be very interesting to hear regional commentary from the smartphone companies reporting in coming weeks. So I guess as go car sales, so go smartphone sales. And of course, for anyone who doesn't know me, I don't own a gas-sucking car or a smartphone. The only phone I have is this dumbass Skype in this computer. It cost me $32 a year. My phone bill for the entire year is $32, as it has been every year for the past 4 years, because I use Skype. Anyway, guys, I'm going to wrap up this salad bowl of a rant as Obama is probably about finishing up his parade while I've been ranting. And I'm going to get off and enjoy this day, because I need to get together with my new tenants, because I'm actually at work today as a landlord. And for people who know me, you'll enjoy the humor of this. I just rented out this house out in Redneck Ridge, in this little village east of Austin. It's half white redneck good old boys, the other half Mexicans. Have my little tale. On Martin Luther King Day, I just rented out my house to he's a black man married to a Chinese woman, and they're moving into my house between a family of Mexicans on one side and a good old boy white redneck on the other. I tried to warn them, but there you go. So this is how I am celebrating MLK Day, by offering my house to a very nice black organic farmer and his Chinese wife, who will be having a bouncing bundle of joy, a home birth apparently, in my little house in Garfield, Texas. So talk about, in a space of 3 houses, we have Mexicans, Chinese people. So I'm supporting the Chinese economy is helping to pay my rent. A very nice black fellow and a very nice white redneck, in a space of 3 houses in the melting part of Garfield, Texas. But I need to go find a rental contract. So let me take off my Doomsday Prophet hat and put on my my landlord real estate investor hat and say, bye guys.